Well, joining us first on the program tonight is Mr. Godrej, the chairman of the Godrej Group. Mr. Godrej, first of all, what kind of questions do you think that this entire Satyam issue has raised on corporate governance in India?
I think the question first is that companies should realize that corporate governance is extremely important. Corporate governance creates value for the company, and if corporate governance is perceived to be poor, or if investors feel corporate governance norms are not adhered to, then the market can punish a company. And this is a situation in which a decision taken by the board was thought to be against the interests of the companies by almost all investors in the company, and the investors punished the company very strongly. I believe the market cap came down to about half of what it was on the previous day on the New York exchange. And this is a very clear case that good corporate governance is not only very important, but good corporate governance pays returns.
But do you think that corporate ethics is still a grey area for India Inc.?
No, I think very clearly there are some companies in India who are absolutely top-notch in corporate governance. There are others who may not be. I think that's the kind of picture in most countries. Not all companies in every country have excellent corporate governance. So I think in India also we have a range of corporate governance. In fact, I spoke this morning on corporate governance at a CII breakfast series. And I think what is very important, that we must propagate the importance of what corporate governance is. To my mind, it's very simple. Corporate governance is ensuring that the long-term interests of the company are safeguarded. And that is the important job of the board of directors to ensure. And independent directors must be there to ensure that if the non-independent directors, whether they are promoter directors or executive directors or any other kind of non-independent directors, if they suggest an idea which is against the long-term interests of the company in the view of the independent directors, they should shoot it down.
Okay, well, when you talk of independent directors, though, is there a lesson in particular that you think there is for family-run businesses? Did this episode, you think, happen because all the companies involved are family-run?
In fact, when I looked at the board of directors, I think some of the independent directors seemed to be quite eminent. They were professors from very good institutions, etc. So I don't know exactly what happened in this particular case, but I was surprised that a major diversification was not thought to be against the interests of the company in the long run, and especially since the acquisition was of a company that belonged to the promoters. I thought it should have been paid much more attention than it was.
How does, though, something like this mar the reputation of India's firms in the eyes of foreign investors?
Well, I think two things will happen. One is people will see what happened in that particular company, and that will be looked upon poorly.